The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Europe. I'm Steve Sedgwick with Karen Cho, and these are your headlines. So Nvidia posting another blockbuster quarter as revenue surges 85% to more than $80 billion, with the chip giant also announcing that amount in share buybacks. The CEO, Jensen Huang, telling this very channel he's confident about build-out and demand.
The biggest thing that's happening is that AI has moved from generative AI to agentic AI. In the AI era, compute is revenues, which is the reason why our demand for our compute is so sky high.
SpaceX finally files its long-awaited prospectus ahead of what is expected to be the biggest IPO of all time, amid calls for data centers in space and a million-strong colony on Mars. And OpenAI reportedly also looking to file for a listing as soon as this week in another potential trillion-dollar offering. Key shareholder Softbank surges in the Asian session to its daily limit, buoying Japanese stocks.
And let's take a look at US markets and what we saw in the session yesterday. Again, a little bit of appetite coming through for the Dow, 1.3% pop. We saw Goldman Sachs, the top moving stock for the Dow yesterday over the course of the week, also moving higher by 1%, outperforming both the S&P 500 and the Nasdaq. So there has been some caution around the AI story, whether there's been too much froth in the build-out cycle. And don't forget, there was a lot of waiting and seeing around Nvidia yesterday. After hours, the stock has been a little bit weaker despite blowout numbers, huge demand cycle and a new addressable market around CPUs, but the market's still a little bit cautious there, and as a result, that has kept the S&P 500 trapped in somewhat of a range, only 1/3% for the trading week, even with the move high of 1% yesterday, and the Nasdaq 2 outperforming. That just takes the market slightly firmer for the trading week by 0.2%. Where you're genuinely seeing massive moves in the market is across in Asia today, particularly on the South Korean market. Samsung managing to suspend a workers' strike that has put a huge bid back into Samsung stock, but also for the South Korean market itself, popping more than 8%. We know there are a couple of big drivers for that market, being Samsung and SK Hynix, and again, proving very relevant for the direction of trade. When it comes to Japanese stocks, you've also had a big move, 3% firmer, some stronger PMIs showing expansion for May. And don't forget, there are dangling questions as to how the impact of the Middle East is going to hit growth across the world. The fact that even at a slower pace, growth was still much stronger, the market celebrating that in terms of the signals. European futures just looking a little bit tentative at this hour, but I was pointing out before the break that we have had outperformance in Europe this week. We've outperformed the US markets by some margin, particularly on the DAX, which has claimed about 3.3% for the trading week versus that 1% that we saw stateside for the week so far. Let's push on to a big event. SpaceX. Now, Elon Musk's SpaceX has finally unveiled its prospectus ahead of what's likely to be a record IPO and is set to put the world's richest person at the helm of two separate trillion-dollar publicly traded companies. The document revealed the SpaceX revenue numbers jumping 15% in the first quarter to $4.69 billion, with Starlink accounting for 69% of that. It also revealed accelerating losses amid massive capex in AI and infrastructure. Q1's net loss came in at $4.28 billion after the company lost almost $5 billion last year. SpaceX unveiled a unique lockup structure as well, which is designed to get a bigger float sooner, which allows it to engineer a faster inclusion with greater weight into the NASDAQ 100. Instead of structuring a typical 180-day period before insiders can sell, SpaceX has gradually ramped the tradable float. Elon Musk is not privy to any of those early release provisions. Steve.
Well, Karen, let's bring in another guest on space, because our next guest says space is no longer just about exploration. It's becoming the next frontier of AI infrastructure. Martin Rosemuller is Fanex CEO of Europe. Martin, thank you very much indeed for joining us. Look, Karen was just pouring through some of the details, but the deeper you go into the SpaceX prospectus, the more extraordinary some of the dimensions of what Mr. Musk wants to do, is doing, thinks the world should be doing, become. Is SpaceX, quite frankly, just too disparate with too much control still post-IPO from one person to actually be a great investment?
Well, it's a really good question. There's definitely some doubt on the way Elon Musk wants to keep control of the company after the IPO. Then again, he apparently has the power to do so. He's been very successful in other endeavors, and maybe it's a little bit too soon to dismiss SpaceX's potential just purely based on this. But it would be something that, as an investor, you should really carefully look at before buying into this.
And yet, Martin, and again, look, I don't want to be a naysayer. We've all seen the Elon Musk story. He's proved so many people wrong so many times, and in his just such an amazing, innovative spirit. But there are so many question marks about a company which it still dominates the satellite market, or the reusable flight market at the moment. It dominates Starlink, and yet is still losing lots of money. If it were to lose the dominance on those two areas as well, then we're talking about a company that potentially is going to be spending a lot of money, but potentially not necessarily seeing the benefits come through.
Yeah, you're completely right. I guess that's definitely a big unknown. Looking at it from my personal perspective, I've always been a bit of a space nerd. I've followed anything from the real science at NASA to the science fiction of Star Wars. And we've launched the space ETF about 4 years ago already. I think regardless of whether SpaceX will live up to its expectations, the space industry, and there's many more companies obviously acting there, definitely has a big promise. As an investor, I always try to stay away from just betting on one company. I think being diversified really is a wise thing to do, especially in a new industry like the space industry. There is so many cool companies there, and SpaceX obviously gets all the attention now. But if you look at Rocket Lab, a company founded by New Zealand guy called Peter Beck, it is such a exciting scene, and there's so many other examples. So I would definitely urge investors to look a little bit beyond just SpaceX and just have a view on the entire industry.
Martin, I thought it was so interesting to hear from Jeff Bezos as well overnight from CNBC's perspective, because he was talking about data centers in space, the unlimited solar power, just as the market has been pouring enormous amounts of money into CapEx build out on the ground around AI. If we're going to see this big disruptive force that's going to be much cheaper eventually to power AI data centers from space, where does this leave the extraordinary build out we're seeing on the ground?
Well, I think first of all, the build out on the ground will definitely will be needed in the next couple of years, because before we are able to create this big capacity in space, that will take some time. But it's good to see there is alternatives to just the data centers on the ground. I think it's also great to see that people now have the at least the sort of recognition that space is more than just putting some rockets and satellites into space. You can do different things. So AI centers obviously is one of them, but space exploration, maybe even mining. There are so many things that are out there that we could do that we're currently just doing on Earth. So I guess that's one of the reasons that we're very optimistic on the space industry as a whole. And AI, obviously, it's been a buzzing theme for many months or years now. The fact that now it also relates to space, attracts more attention, makes it more interesting, and I think overall that's a very good thing.
Martin, let me just segue over to semiconductors, because it's been a fairly significant evening for Nvidia, talking about the demand cycle and some of the competition that is coming through even from the hyperscalers making their own chips. This week we've also heard from the Chinese about whether they want to take the chips from Nvidia and whether they want homegrown talent. You've been talking about semiconductors as a sovereignty issue. Where are the Europeans in the mix?
Well, there's obviously ASML as a Dutch company. Just last week, they announced that they will be working together with India. Modi obviously paid a visit to the Netherlands, and this was one of the topics on the agenda. And that cooperation could be very interesting. I think looking at what Jensen Huang said yesterday, commenting on the figures, AI is definitely now going mainstream. The demand will be huge and will definitely need more competitors, more supply to deal with that. So I'm still bullish on semiconductors. I think it's still very much a growth story. So yeah, I'm just very positive on that one.
It's great to have such positivity this Thursday morning, Martin. But look, the scale of these three IPOs, which are apparently neck and neck to get to market, SpaceX, OpenAI and Anthropic, could draw a vast amount of money from elsewhere. Do you think actually we could see a bit of wobble in some of the listed names so that money is freed up to get involved in these big IPOs?
Well, that's obviously really hard to predict. Personally, I'm not too worried. I think there's still huge amounts of money on the sidelines. There is, no immediate reason to believe that the, let's say, well-known listed companies will suffer because people will take money out and put it into these new big IPOs. Besides the IPOs that we see come to market, obviously the free float is limited. So the amounts needed to absorb that are also limited, even though obviously they are crazy amounts. 50 to 75 billion for SpaceX is obviously not nothing. But I do think it's something the market could quite easily absorb.
Really good to get your views today, and good to speak to a self-avowed space nerd as well. Martin Rosemuller, Funnex CEO in Europe. Thank you very much indeed for that, sir. Well, talking of these blockbuster IPOs, OpenAI is preparing to confidentially file its IPO, potentially as soon as Friday, according to multiple reports. The AI company, valued at more than $850 billion, is working with banks, including Goldman's and Morgan Stanley. A potential listing would be one of the largest public market debuts in history. Now, an OpenAI spokesperson told CNBC that the company's focus remains on execution. And moving on, President Trump is reportedly expected to sign an executive order on AI and cybersecurity as soon as today. This according to Reuters, which cited sources familiar with the matter. This amid pressure from some parts of his base, his political base, to increase oversight of new AI models such as Anthropic's Mythos.
And coming up on the show, British software group Sage reports earnings. We'll bring you the details after the break. Stay with us.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
UK software group Sage has reported an 11% rise in first half revenue, driven by strength in its cloud unit. Let's hear more about that. Joining us is Steve Hare, the CEO of Sage. Steve, you've had some double-digit revenue increases today, and you've cited the cloud software product. Just to walk us through what you saw in the quarter.
Yeah, so it's been a particularly strong quarter, as you say, with double-digit revenue growth, but also, accompanied by strong earnings growth. And this is really driven by, we're seeing strength, from our customers, both existing customers and also new customers, adopting, solutions from Sage that they can trust and that give them, confidence to plan for the future.
It's been a bumpy ride over the last number of weeks, in particular, even before the events of the Middle East, because the market was questioning whether there was some form of SaaS apocalypse, SaaS Armageddon, whatever you want to call it. And one of the trades was around your company and whether it was going to be disrupted by this incredible technology coming through from the likes of Anthropic and others. What are you seeing in terms of how disruptive it could be?
Yeah, I think the first thing to say is that the technology is amazing. I mean, we're fully embracing AI, and we've been working on AI, for many, many years. I think the question is the context in which it's used. Our customers are doing mission critical things. They're filing accounts, they're making payroll, and 99.9% accuracy is not good enough. It's got to be absolutely correct. So it's the context and the domain knowledge that you're able to apply to the technology to give solutions to customers that they can trust, and the outcome has to be accurate. And the big models, off-the-shelf models, are just not capable of achieving the consistent accuracy that's required in our industry.
Steve, I know CEOs are very loath to speak about their shares, but the fact of the matter is, over the last 12 months, because of those concerns that you and Karen were just alluding to, shares are down 29%. Is the market getting this very, very wrong on Sage?
Yeah, I think what the market seems to be doing at the moment is putting everything into the same category, right? So they're saying, we have concerns, we're not sure who the winners and losers are going to be, so we'll just put everybody into the same category. I think, and all we can do is keep delivering our proof points. So obviously days like today, where we deliver our, strong set of results, but also, quoting what I'm seeing with customers. We're trying to help by letting customers speak out on our behalf, talking about how they're using our solutions. And as I say, look at something like payroll. If you're expected to be paid £1,000 and it's 999, that's not okay. If the Inland Revenue are expecting £1,000 and it's 999, it's not okay. And I think the market is just, needs to catch up with how different industries and different segments are embracing this technology and the outcomes that are required. And in mission critical systems of record, accuracy and trust and compliance is everything.
Steve, you've got another problem, or more to the point, your amazing clientele, the SMEs that keep Britain going, especially have got a major problem, and that is a government which is getting more and more to the left, that are talking about even more wealth taxes. I know Streeting was talking about wealth taxes yesterday, that is making it harder for the private sector to employ as well. How concerned are you, as much as Karen, you and I were talking about the technological challenges and the market's understanding of that, how concerned are you that we've got a government that is anti-business?
Yeah, so I wouldn't go as far as say they're anti-business, but as you know, I'm a huge optimist for the UK. I'm always speaking out on behalf of the UK, and when I speak to governments, including the current one, what I always say to them is, look, you've got to create an environment where it's easy to create new businesses, it's easy to scale and grow businesses, and by the way, if you don't do that, the economy simply will not grow, because SMBs are the backbone of the economy. And so, it's always difficult when people are running for office. You get lots of headlines and lots of politics. But in the end, everyone needs the UK economy to grow. And to grow, SMBs need to grow. So I hope when all this settles down, whoever's in power will be able to talk to them about how we get the economy growing faster.
But Steve, I hear you, and I love your optimism, and you're the perfect offset to me, who is an eternal curmudgeon, so I do appreciate that. But it's not only the word, it is the deed of this government. And Karen and I have had some wonderful debates on air about whether Rachel Reeves is good for business or not. But she is the lady who's taken away salary sacrifice. That's Reeves, not Karen, by the way. She is the lady who has added the national insurance bill for all those SMEs as well. She is the one who's putting more regulations in the face of growth of business as well. Again, hasten to add, it's Rachel Reeves, not Karen. The deed is there as well, Steve, and it's making it more difficult for your clientele.
Yeah, I think, look, there are definitely some headwinds, but also if you look at the technology that's available that people have today, it's actually easier to create a business today and run a business today than it's ever been. There's capital available to back people with great ideas. Now, as always, we would always love government to spend a bit more time understanding and assisting business. And hopefully, whoever's in power, they have to have the economy growing. Because if the economy doesn't grow, look, at the end of the day, it doesn't matter how much you tax people, income tax will go down if the economy doesn't grow. So hopefully in the end, everybody sees sense and everybody realizes that the most important thing in the UK is to enable SMBs to grow.
I'm glad Steve was making clear distinctions between my policies on workforce versus Rachel Reeves. But Steve, can I come back to what we're seeing out of the technology side? Because you put forward the argument that there is a moat around your company because of accuracy. But the reality is there's a lot of AI native companies that are coming at the industry in a different way. They're bundling accounting, ERP, finance automation. They're trying to make it a slicker operation versus using the legacy software systems. Isn't that a threat?
Look, we always, it's a competitive industry, always has been, but all of those things that you described, Karen, that's exactly what we're doing. So, Sage has over the last few years created a platform over which we deliver exactly those things. We deliver integrated workforce automation, workflow automation. So, for example, our flagship mid-market product, Sage Intacct. Last November, we launched various agentic capability, which is embedded within that product to automate accounts payable, for example, and to automate the finance close. This has already been adopted by over 500 of those customers. And overall, across the whole of Sage, one of the numbers we quoted today was over 500,000 of our customers have already adopted AI embedded functionality or workflows. So we completely agree with that approach. But I think people sometimes forget, Sage, we created Sage AI Labs 8 years ago. We've been working on AI for the last 8 years. And of course, agentic and generative AI is a big thing, but we're completely embracing that. So if you want all the latest technology, but you want to take it from a trusted vendor who's been around for 45 years, come buy from Sage.
Steve, just in terms of the initial point I made about the share price then, you think the market's getting it wrong. You said yourself you're there with agentic and other AI products. You've been working on it for a long time. Are you going to buy back more shares? Because if they seem that far wrong, again, it's another example of a British technology company trading at a big discount, perhaps even to its continental, let alone US peers.
Yeah, so in the first half, we announced 2 share buybacks, which in total came to about £600 million. We're well over half the way through that. We'll probably complete that, end of June, July time. And then we'll see where we are at that time. But, going back, I obviously can't control valuation. But I obviously think we have a very strong future. And in the end, you have to look at the cash flow generation of any company. And our long-term cash flow generation and the cash flow generation that we see into the future is extremely strong. And we're growing, strongly. So hopefully in the end, over the next year or so, the market will start to sort out the winners and losers, and they'll see we're one of the winners.